Hello and welcome to this Tier Markets Daily Market Commentary for Wednesday, the 19th of February 2020. I summarised Tuesday's session by noting the dollar was the standout performer on the day, and I will ultimately do the same for Wednesday, a day that saw strong US PPI data as well as much better than expected building permit and housing start numbers in the US. A day when the FOMC minutes revealed a Fed now sidelined with US interests going nowhere fast. A day when the S&P and NASDAQ would both make new highs, despite warnings from such powerhouses as Goldman Sachs that the coronavirus effect was not being correctly priced in. A day when the Atlanta Fed actually raised its Q1 US GDP estimates from 2.4% to 2.6%. As traders used to say when I first started to trade FX many moons ago, buy dollars and wear diamonds. If yesterday was about Euro's continued demise, today would be the day of the yen. And no, that is not a new James Bond movie. It's what happens when a currency that sits in such tight ranges against the dollar suddenly explodes higher. 109.90 to 111.59 in 24 hours. That's impressive and something I will touch on my technical piece at the end. Euro dollar had another attempt to break 107.80, but failed and would ultimately close a little higher at 108.10. Cable got an early boost from stronger than expected sterling data, running to 130.24, but dollar strength would take over and the early gains turned to sharp losses as 129.10 would trade towards the end of the US day. Aussie and Kiwi had also languished against the dollar despite global equities returning impressive gains. And as mentioned, the S&P and NASDAQ would make record closes. The Dow Jones and DAX would both close higher by over 100 points. And the mighty yellow metal that is gold would continue its march higher, making a new high of 16.13, but just shy of multi-year highs over 16.16. What will be interesting to see now is whether pairs like dollar yen can hold on to such impressive gains that were made today. As dollar yen would take the title for the major move of the day, I figured let's take a closer look from a technical perspective as to exactly what happened and see if we can find a reason why. A while back, I put up this daily dollar yen chart showing a very long-term flag formation. The top line here goes back to June of 2015, so almost 5 years ago. As we know, when we get breaks out of these type of formations, as the ranges begin to squeeze, which we can see here, and this obviously is a daily chart, so pretty significant. We can get some very sharp moves, and what we saw today certainly falls into that category. A break above that line, as you can see there, saw an immediate 160-point rally. Impressive for sure. Can it hold? Well, I guess we'll have to wait and see. That line will now certainly become a line of support, and we would certainly expect there to be some good support levels to be found if we were to get any dips along the way. So, keep an eye on this. I think this is a significant break higher we're seeing here in dollar yen, and general dollar strength across the board. So worth watching as we go forward. And with that, I shall wish you all a good day. I hope you had a good day trading and look forward to doing it again tomorrow. Cheers.